Hey folks, welcome to Verified Investing. My name is Gareth Soloway, Chief Market Strategist at InTheMoneyStocks.com. Today's date is Tuesday, November 10th, 2020. And I'm here, folks, to talk about the FANG stocks, basically Amazon, Apple, Google, maybe Netflix we'll touch on, definitely Facebook. I want to give you the hardcore analysis of how things are going, what the charts are telling you specifically about near-term price movement, all right? Before we get into that, just a reminder, follow me on Twitter at Gareth Soloway, and also come to the website InTheMoneyStocks.com and look for my name. Underneath it is a drop-down. You can see my two services, Verified Investing Alerts and Verified Option Alerts. Verified Investing, to just give you a sense, 188 closed-out trades this year for over 1,600% net gain. It has been a record year, my best year ever, in fact, in terms of swing trading. All right, let's take a look at Amazon. Amazon is down over $100 right now on the day, continuing to collapse down. Basically, what's going on here is that as we now have a vaccine that looks viable, that was announced yesterday, investors are running away from a lot of these tech names because, in all fairness, people were piling into Amazon thinking that people were going to be buying more and more and more and more online, which they did for a while. But if things reopen, that may change. Obviously, you're seeing a run away from the stock. Now, having said that, is it going to go lower? The answer is yes, if this key level breaks. Let's look at the chart. There's a clear head and shoulder pattern here. All right, look at this. Shoulder, head, shoulder. All right. The neckline is right here. It's a classic flat neckline. Again, shoulder, head, and shoulder. The key is if this line breaks to the downside, it will start a move on Amazon that takes you all the way down to 2,250%. Basically down, right down in this range. There's a gap fill down there, right in this area as well. So right around this $2,200 to $2,250 range. That's a whopping $800 drop from the current levels, folks. Over 20% downside. Now, let me repeat. This is valid only, I repeat, only if you get a break of the neckline. So as a trader, as an investor, that's what I'm focusing on now. I'm watching this level. The neckline is at around 28.82. A close on the daily chart below 28.82 will trigger the sell-off that will continue down to that target price. That is very bearish for this stock, folks. Now, in all fairness, it hasn't broken that line yet. So is there a glimmer of hope for those investors out there that are long this stock? Yes, there is. But let me remind you, again, you have to watch that level. If that level breaks, it is not good for the stock. So watch that level. Let's take a look at Apple, AAPL here. Now, Apple's a little problematic here because the bounces have been so weak. You've been making lower highs, and that's concerning considering this was the behemoth that was just plowing this market higher. So you can clearly see here's a high pivot, a lower high, and a lower high. And that is not good because, again, that is a signal of weakness. It tells you of distribution going on. Now, there is a level I'm watching on this stock. It's a pretty crystal clear level, this trend line right here. So much like Amazon. Now, this isn't a head and shoulder pattern, but it's a very crisp trend line that we can all follow. Basically, what this trend line is telling me is if you close below it, you're going to go to this gap fill as target 1, and then potentially you're going to go to the moving averages, the 200 moving averages right below that as target 2. So basically, if you look at the moving averages, you're going to come down to this area. Again, right now, Apple's holding up. It's flat on the day. It's one of the few big tech stocks to be flat on the day instead of being sharply lower. But any sort of break of that trend line, of this trend line right here, will send it immediately to about the 95 to 90 level, $95 to 90 level. Once it gets there, I expect a substantial bounce, but I do think that it's going to head there, folks. I do believe that, again, the market, especially when you look at the price action on the Qs, the S&P. The S&P yesterday was so bearish. I covered that in my last video a little while ago for you guys. The close on it, the time count, the key trend lines hit yesterday, and the reversal, just epically bearish on the charts. All right, let's take a look at Google. Now, Google's one of the few that's held up well. This stock is definitely of the group, the better of the batch, but I would still look for a pullback to buy. The reason I say that is because it's the best of the batch because you are making higher highs, right? Here's your high pivot. Here was a high pivot. So high, higher high, higher high. That's bullish on it. Technically low, higher low as well. So that's a good sign. All I would say is look for a pullback into this range, the moving averages, and then I think you can be a buyer. This stock in valuation terms is probably the best valuation of the group as well, which makes a lot of sense why it's performing better, because we're seeing an exodus from the high valuation plays to the very much the lower valuation, kind of the cyclicals, the ones that should do better as we get past COVID and so forth, that have lower PE ratios. And Google of the group is kind of in that group. All right. Is it possible for regulation to come in? Yes, I do think regulation is coming. I don't think it can be avoided, so that is a risk, but that's why I would say don't buy it here. Look for just a pullback and look to be a buyer on a pullback. Again, probably around 1550 to 1600, I think, would be an intriguing level as an option for a buy-in. All right. Next, let's take a look at Facebook. Facebook, very clear trend line here. It's still holding the trend line. You can see it right here. Pivot low, pivot low, pivot low. It's bouncing a little off the lows of the day, but still down over 3%. Notice the high and the lower high. That's a bearish sign. This could be looked at as a bear flag. Once it breaks this is the target down here, your daily 200 moving average, around $228 to $230 on the chart. All right, so again, keep an eye on that. Lastly, Microsoft. Microsoft is coming down again. Now, Microsoft's a little bit of an interesting chart because you had a high, you had a lower high, and then you had a higher high. So this tells me that this stock is not as weak as the Apples of the world. It's not as weak as the Amazons of the world, but it still looks like it wants to retrace into this level. Then you have this support and the 200 MA. But somewhere around here, this is going to start to get interesting in the short term, around looks like around the 190 to 200 range, right in that vicinity. So we'll keep an eye on this one and see how it goes. But again, certainly looks like it's had a crazy run to the upside. You even have another support down here right at the 200. So for me as a swing trader, I'd probably be looking at like 191, 190. Yeah, right around 190, 191 as a swing trade entry. So as you can see, I do think the market is problematic. I think when you come to these big tech names, you have to remember what's gone on over the last 5 to 10 years. There has been a massive influx of investor money. Like we're talking, insane run up in these stocks, right? So if you think about the reversal of that, so like a pendulum swings one way, which is all the money going in, it has to swing somewhat to the other way, right? It just balances out. And that's part of the issue for these tech stocks, is that just naturally you need to unwind some of the crazy buying over the last 10 years that's gone on. And that's another factor that's going to bring these things in, plus potential for corporate tax rates to go up, potential for the long-term cap gains to go up. Next year, remember, you have the election, the Georgia Senate election in January. So investors are going to have to make the decision before January into the year end if they want to pay the tax rate this year on long-term cap gains. So that's a big decision. I mean, you're talking about probably trillions in dollars in profits overall that the investing public, especially the big ones, the big funds, are going to have to decide, do they want to hold these stocks into year end? So it does open the door for a lot of these targets for downside to get hit before year end. I think they will get hit before year end, and it should be very profitable for those of us that are short these stocks and looking to pick them up at potentially, into year end. I would say would be very interesting on that front. All right. Have a great rest of your day. Don't forget, come find me at inthemoneystocks.com. Look for my name. Underneath it, you'll see a drop down, and you can find my 2 services there. The profits are flowing. Members are rejoicing. They are buying cars. They're buying houses. They're buying boats. They're redoing their houses during COVID. It's all because of In the Money Stocks profits that we're generating. Have a great one, guys. Take care.